Hello, my name is Keith Wofsy, and during 2018, Connecticut has changed the way that it is taxing S corporations, partnerships, and LLCs. Now, these are LLCs that file their own tax return, which just happens in a lot of LLCs. It does not affect the LLCs where the income and the expenses are being reported directly on the owner's tax return. Now, I'd like to illustrate how this law changes things. All right, this is the prior law, prior to 2018, so 2017 and before that. Let's say you had a sub-S return and it had $100,000 worth of business income after expenses. The company would not pay a tax. The individual would pay a tax, report the income on their personal return, and pay the tax. So there'd be $100,000 reported on the personal return. Now let's assume that that individual would pay a $4,000 tax, whatever their tax rate is. Let's say it's $4,000. That individual would take a Schedule A tax deduction for $4,000 on their federal return. They'd file the Connecticut return, show the payment, and end up with a refund because they paid the exact amount. Let's call that the $4,000. Now here's the new law. Same $100,000 of income. Now in this case, the company is taxed at the highest Connecticut rate. Now let's call that $7,000. It's actually $6,999, but let's call it $7,000. So now, instead of reporting $100,000 on the individual's personal return, they report a $93,000. All right, as it relates to paying $4,000 individually, not needed because the company paid the $7,000, so there's no personal payment to make. Relating to taking a federal tax deduction for the tax paid, not needed. Why? Because the individual is only reporting $93,000 rather. So there is no need to make a $4,000 Connecticut tax payment because $7,000 would have been paid by the company that passes through to the owners. Okay? And there's also no need to take a $4,000 or $7,000 state tax deduction. You get that deduction because you're only reporting $93,000 worth of income rather than $100,000. So this is the way that the state is trying to get around the so-called SALT tax, the limitation, that $10,000 limitation on the income and property tax. And so again, the $7,000 tax payment that the company makes passes through to the individual. They pick it up on their Connecticut tax return as a payment. Now, if the individual had no other income, only the company, they'll get a refund. And they get that because the $7,000 paid by the company, that's at the highest Connecticut tax rate. And we're not taxed at the highest Connecticut tax rate on all our dollars. Some of it is taxed at 0, and we're on a graduating system. So in this case, if the owner had no other income, they would get a $3,000 or so refund, depending upon their tax situation. Now here's what it means to the company as far as paying the tax. Again, we're working with the $100,000 profit. The actual Connecticut tax rate is 0.699, so I'm using that illustration in this calculator here. And this is when Connecticut would want the payments, April 15th, June, September, and then January 15th of the following year, totaling the tax that is anticipated on the company. Now, if for 2018, if you have not made any tax payments for the company, you want to get that all in as soon as possible, but certainly before the January 15th deadline. If you have any question how this new law affects you and your company, please call me 203-327-5255. 4311.